Hello and welcome. You have tuned in to Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me Cheryl D'Souza. And viewers, this is a show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get all your portfolio-related queries answered by the experts, and we will connect with them live. But before that, let's have a look at what the markets are up to, because Cheryl, there's been no stopping in the selling because it's the end of the October series, and actually nobody expected October series to be this bad because October series historically has been good for the markets, but like they say that nobody expected the war as well to happen.
Absolutely, a lot of unpredictables actually, Shrishti, that has actually led to such a decline coming in the market. 6th day in a row is what the markets have been falling for. And as you can see, today we are sub 18,900 mark as well for the benchmark indices. And in fact, the selling is pretty furious. As you can see on your screen, at the day's lowest point coming in for the benchmark indices, no respite on the screen. Axis Bank was the only Nifty counter that was trading in the positive territory, and yes, that's the only one that's reacting to his numbers and holding the fort, bucking the overall market weakness. The only stock in the Nifty that is in the positive territory. Nifty Bank moving in tandem with the benchmark indices. Broader markets, the carnage over there is much sharper than expected. In fact, Shrishti, none of the sectors are also gaining in trade today. So it's carnage all across the D street, and this is on back of the weak global cues. You also have concerns over the run-up in the broader markets as well. But is this just a correction, or will this turn out to be a prolonged sell-off? And how are the indices actually stacked up right now? Let's go ahead across straight to Somit to get that insight. And Somit, 6th day in a row, Nifty sub that 18,900 mark at 4-month low levels. And when will this stop?
Well, I definitely don't have an answer to when will this stop, but I can just give you a perspective of how bad the fall has been in the last 5 trading sessions. Now, for Nifty, if you see in the last 5 trading sessions, they have declined by around 3.5%. Mid cap and small cap, the fall has been much wider, around 4.6% for the small cap and around 5.3% for the mid cap index. Now, what levels they are trading? Nifty 50 is trading at its lowest level since June 30th, and it's below its 50 and 100 DMA. The Nifty mid cap index is trading at its lowest level since August 25th, and it's trading below its 50 DMA, while the small cap index also slipped below its 50 DMA post yesterday's fall, and it's at lowest level since September 1st. On the RSI front, if you see, now 30 is the oversold zone, and Nifty 50 and Nifty mid cap are trading at around 32, that is the RSI level, while the Nifty small cap 100 index RSI is around 41, and for all the 3 major indices, the RSI is at its lowest since March 2023. Now, this is a list of percentage of stocks that are still trading above the 200 DMA. Now, for Nifty 50, 76% of the stocks are trading above its 200 DMA. This number was close to around 94% a while back. For Nifty for mid cap 100, 80% of the stocks are trading above the 200 DMA, and this number was around 96% a while back. For small cap, around 78% are trading above 200 DMA, and a while back this number was around 91%. Now, on the stock specific side, in Nifty, only 2 gainers we have seen in the last 5-day move. That's Nestle and Bajaj Auto. Both the stocks are up around 4%, while on the loser side we have Wipro, UPL, Adani Enterprises, NTPC and Divi's Lab, and all these stocks have fallen anywhere between 6 to 7%. When it comes to the mid cap 100 index, only 5 stocks have managed to gain in the last 5 trading sessions. That's Prestige Estates, Persistent, Ipca Labs, United Breweries and Tata Elxsi, and the gains have been anywhere between 1 to 6%. And on the losing side, if you see, top 4 are PSU companies: IGL, Bank of India, Mazgaon Dock and BHEL, and the fall has been anywhere between 12 to 18%. For Biocon, the decline has been close to 12%. When it comes to small cap index, there have been around 9 gainers. Top 5 are BAC, Angel One, Suzlon, Credit Access Grameen and Welspun India. And on the loser side, again, NMDC Steel, Hutco are PSU companies. MRPL is also a PSU company, while there is HFCL and Zenza Tech also among the top 5 losers. Now, when you see beyond the indices, as per Bloomberg, there are close to 5,686 stocks listed in the Indian exchanges, that is BSE and NSE, and 61% of these stocks, that is close to 3,485 stocks, have declined in the last 5 trading sessions, and close to 2,036 stocks have a market capitalization of less than 500 crore rupees, which means that the fall has been much more in the micro cap space, that is less than 500 crore of market capitalization. Last on the sectoral side, if you see, Nifty PSU Bank Index has declined the most, around 7% of fall, followed by Nifty Metal, while the fall was the least when it comes to the Nifty Auto Index, which has dropped only 2%. And lastly, when you compare with the global indices, the fall has been not that bad for the Indian markets, because markets like S&P Philippines have declined much more than the Indian market, which has declined around 3.4% on dollar terms, while markets like S&P 500, Philippines, Korea, FTSE 100, China have declined much more than the Indian markets in the last 5 trading sessions.
Thank you so much, Somit, for putting into perspective how bad the fall has been, especially in the last 5 days in India. Like you mentioned, that we are not declining solo, and there are rest of the markets as well which are seen to be declining even more. But everybody wants an answer to the question that when this selling will stop. So let's get an expert take on that. And earlier today, we spoke with Gautam Shah, CMD, founder and chief strategist at Goldilocks Premium Research, and he sees further correction in the market and suggests that heavyweights like HDFC Bank and Reliance need to perform for the markets to recover. Let's listen into his take.
We have been working with a target of about 18,900. We are at the doors of it. This is an important support. The market could see a bit of a bounce from here, but I don't think we are out of the woods as yet. There is clearly a lot more downside. There is going to be a lot more price correction and time correction, and the markets are not going to turn around in a hurry, something that we have got used to in the last 6 to 8 months. So if and when 18,900 were to break, I think another 400-500 points downside towards 18,400, 500 is quite likely, and one should not indulge in bottom fishing even now. I think there is just too much leadership coming on the downside from many stocks and many sectors, something that we've not seen in a long time. And the point which I made earlier, when two big heavyweight stocks like HDFC Bank and Reliance do not perform and actually underperform, the market will always remain under pressure. And to add to all of this, I think mid caps and small caps, given the kind of rally that they saw in the last 4 or 5 months, almost vertical and parabolic in nature, there is clearly a lot more room for downside there as well.
Gautam, I have lots of follow-up questions. First things first, how much more downside?
I'm very clear about the trajectory. When you have strong downtrends, you really do not know the magnitude, or it's too amateurish to even call the magnitude of the downside. I think in terms of working numbers, we actually put it out in our big picture report at the starting of the month that 18,400, 500 is the number where we are looking at serious support coming in. Not to say that it will be the worst case. I think the chances of even this number going eventually is pretty high, but we will review around that point. But I think having said that, I think this is the time to be conservative. This is the time to be cautious. This is the time to be in the top 100, to be in top quality, because I think not just India, I think global markets are under pressure. I mean, look at the Russell 2000 in the US. It's near a 52-week low. People talk about the Dow, people talk about the Nasdaq, the S&P 500. Those indices might not be as relevant in the Russell 2000. Look at some of the Asian markets, the kind of breakdowns that we've seen. Look at the way some of the European markets have behaved in the last 1 month. So it looks like a global scenario right now, and unfortunately, given all the geopolitical developments, it's only fair that the markets react this way.
All right, so that's the word coming in from Gautam Shah on where he sees the markets headed, Shrishti, and there's certain key triggers. He did say that he's overall cautious on the markets. He said there's time to be cautious on the market. For Nifty Bank, in fact, he's expecting further downside for Nifty Bank as well, so definitely no respite in sight, at least for now. And yes, he's saying that Reliance Industries and HDFC Bank, there's scope for further downside, at least 10% is what he had said this morning. So those are the key takeaways coming in from Gautam Shah. And on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we will start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that's flashing on your screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Talking about our experts, today we have Aditya Agarwala, CMT, joining us on the technical front, while we have Mr. A.K. Prabhakar joining us on the fundamental side. A very good morning to you, Aditya, as well as Mr. Prabhakar. Thank you so much for joining us on ET Now. And let me actually kickstart taking queries already then. And this one is coming in from Satya, and Satya is a housewife and a small investor. Also, she wants to know about Sun TV, Coal India, Birlasoft, Devyani. There are a couple of stocks that she's actually holding in her portfolio, as well as Zomato also, and she's making profit in all of them by about 20 to 60%. Now she wants to know whether she should hold on to them for the longer term or book profits. Aditya, looking at the markets right now, and if she's making profits, do you think it's advisable to book at least some profits out of these counters, or should she stay put with them and ride the wave?
Good morning, Cheryl. Good morning, Srishti. Thanks for having the show. So, to be honest, I believe she can actually book profits partially at current levels because she's sitting at decent profits. And I wouldn't suggest to completely exit from these stocks. Maybe look at booking 40-50% profits at current levels from Sun TV, from Zomato. Zomato, we know, has moved up sharply in recent times. And looking at the fact that the markets are correcting and there is more downside without a doubt in the market. I don't think markets have bottomed out yet. There could be a pop from current levels, predominantly because of the fact that we're sitting at extreme oversold levels. But I don't rule out the fact that we can test levels of 18,500, 18,200 as well on the downside. That could be good levels to re-enter your position. The partial profits that you have booked at current levels, and especially in the broader market space, which I've been constantly talking about, there's a lot of froth which was building up there. So the correction can be much more sharper in the broader space rather than the large cap Nifty and then the bank Nifty. So be cautious there, and then because her portfolio is predominantly into the broader market space, which is the large cap and the small cap, it will be prudent to book partial profits at current levels.
Okay, that's the take coming in from Aditya. Hi Aditya, hi Mr. Prabhakar as well. And Mr. Prabhakar, coming to you for the next query. This one is from Raman from Chennai, and I'm sure that we will be getting a lot of such queries throughout the show. So let me just get done and dusted at the start itself. Raman wants to know 2 to 3 stocks where he can buy afresh with a 1-year investment horizon. The markets are definitely falling, and any of your picks, recommendations that he can start buying at this point in time?
Yeah, good morning. Now, I think a lot of large caps have not performed. You take many stocks, ITC or Hindustan Lever, HDFC Bank, they have not. I think even if market corrects, so here the downside might be limited. So no, it is very good to buy ITC because cigarette division is growing still at 10%. So ITC, even Axis Bank came with a very good results. IndusInd Bank, I think that is one more pick. And even whatever is not correcting now, they are better. And yesterday Sonacom came with the results. The results the growth was very good, and their order book is also fantastic. So I think these are few stocks you can buy and hold.
Aditya, the next one is coming from Bhagwan. He's writing to us from Mumbai, and he's being very candid. He's saying that in this falling market, although I'm afraid to enter, but should I look to buy Polycab and Persistent Systems right now for a period of 6 months? Do you think it's time to buy Polycab or even Persistent right now, or should he wait?
As far as Polycab is concerned, Cheryl, I believe we should wait it out. Don't just go ahead and buy the stock. There's a breakdown in Polycab. Maybe around levels of 4,400 is where he can look to revisit and then buy the stock. At current levels, definitely there is selling pressure and you don't want to get into that. As far as Persistent Systems is concerned, yes, that is something which is still looking interesting to me. On the downside, though there is 100-point more downside in the stock, but given the fact that there's a long consolidation that the stock has been going through, he can actually look at buying Persistent Systems with stop loss closer to about 5,500 and maybe look for a target in excess of 6,200. So as far as Persistent is concerned, there's a thumbs up. He can go ahead buy Polycab, just wait it out still.
Moving on, and Aditya, the next query is coming on 2 counters. This query is from Venkat Rao, and he wants a take on HDFC Life, where he's holding approximately 400 shares at a price of 710 rupees. And he also has LIC Housing Finance shares 800 quantity at a price of 525 rupees. At a loss in both of these names, but is this a good time to average out this particular counter?
First of all, Srishti, to all the viewers, I would not recommend averaging out your loss trades until and unless you're very sure about why you're buying the stock. If there are strong fundamental reasons and you are invested in the stock for long run, then it definitely makes sense to average out at lower levels. Then you should actually stagger your buying, not buying one go. But if you bought it just for a trading purpose, for a short-term trading view, you should have a stop loss in place. And I would not recommend averaging out stocks. Now, coming to HDFC Life, again, I would not suggest average out, though it is at very strong support levels. 600 happens to be a very strong support level for the stock. It's a make or break level, Srishti. If 600 is broken, I would rather suggest exit from the stock because then there is more downside in the stock. If it holds 600, then yes, there can be a bounce back to levels of at least 640 to about 650 on the upside. So as far as HDFC Life is concerned, do not average. Again, same holds true with LIC Housing Finance. After a recent up move, stock has come down to test its neckline of 430. That happens to be the immediate support line. We're almost there. If these support lines hold, then maybe there can be a bounce back in the stock. So once there is a bounce back, then you can look to buy more with a stop loss at 430 on the downside, not at current levels.
All right, the lone warrior in the markets today on the Nifty front, that is Axis Bank right now. Actually, it's giving up some of its gains. It's down about 1.2% from the day's highest point. Let's move on to the next query then, and this one is coming in from one of our viewers who's not mentioned the name. Yes, and the viewer wants to know about, or rather has HDFC Bank, Reliance, Asian Paints as well as PI Industries in the portfolio. And he's seeing, the viewer actually is seeing some profits in these counters already. Do you advise Mr. Prabhakar that he looks to actually add some more at these levels of any of these counters, or do you think that should wait it out?
HDFC Bank, we need to understand, a merger has gone through, HDFC and HDFC Bank together, whenever there is a merger between two entities, it has taken two years for the entity to get really benefit the investors. And HDFC Bank is in a very aggressive expansion plan. Last year, they expanded 1,200 branches. This year, they said 1,500. Next year, another 1,500. When you have such aggressive plans, I don't think in a hurry these stocks are going to move up. You are already holding it. Wait for another 2-3 quarters before you can average. Asian Paints, Grasim is coming very aggressively in paint segment. Paint segment has not done well. So I think we can wait. There is no hurry at 2.8 or 2.7. It becomes a better buy rather than buying it at this point of time. I think you asked about PI Industries. Agrochemical as a segment has not done well. Now we have seen results from Sharda Corporation, and we have seen Rallies India. They said their export market is very bad, and the pricing power is also not good. Now, so I don't think it is going to rally in a hurry. We can wait in this counter also.
Okay, Mr. Prabhakar, the next query is from N. Ramesh from Hyderabad. He's a senior citizen and a long-term investor and holding two names, 100 shares of HPCL from a price of 310 and 200 shares of IGL, which has seen a sharp decline in the last couple of weeks from a price of 488 rupees. Should he continue to hold on to these particular names or book losses at this point in time?
See, oil marketing companies, you have state election, you have central election coming. Oil marketing companies normally I avoid. Now IGL, it is because of the statement which has come. Commercial vehicles, gas vehicles will be avoided by 2030. So there was a knee-jerk reaction. Now I think at current value, the correction is almost done. And this is not going to change anything too fast. And I think it is a proposal. It is not it has not come into a law. So it is just discussion paper. How it pans out is something we need to watch out for. But do not average. But at this price, I don't think we need to worry too much on IGL.
Next one is for you, Aditya. This one is coming from Murthy. He's writing to us from Hyderabad on Karnataka Bank. His query is, he's holding about 10,000 shares at a price of 102 rupees per share. He wants to know whether he should stay put with this one or look to exit. He's already making some good profits on this one.
Shall we can hold on to it with a stop loss at 214, 212. So that happens to be the immediate support level. And since stock is already trading at 218, he can actually look at a downside of, he can actually bear with more 4 rupee downside if at all it comes. So hold on at current levels, put a stop loss at 214. If that is broken, then you book out of the stock.
Okay, that's the advice coming in on Karnataka Bank. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And continuing the same, the next query, Mr. Prabhakar, is coming from Vikram from Bangalore, and he wants a take on Ircon International. The kind of run up that all these railway counters have seen, Vikram wants to know, is this a good time to enter afresh in Ircon International?
For a long-term prospect, railway stock still looks good. But we need to understand when market corrects railways, PSU railway stock or PSU defense stock, because of the run-up, they will correct more. So it is better, you do a SIP, maybe a monthly SIP or a bi-weekly SIP so that you get a better pricing.
All right. This one is coming in from Kashung from Manipur. I hope I've pronounced your name right. And he wants to know about Delta Corp actually, Aditya, and he wants to know whether it's a buy right now or no, given the fact that this particular stock has seen a huge downside also based on news flow. No doubt we had some positive development come by earlier this week, but what's your take on Delta Corp? Do you think now it's in the buy zone or no?
Not yet, Cheryl. I believe there is some more downside left in the stock. Massive downward trajectory is what I'm looking at. And then the first target I'm looking at is 100 and 500 levels, still from current levels. Though it has corrected significantly, but I still see more downside. So don't be in a hurry to buy the stock just yet. Wait it out. Maybe around 100, 500 levels. You can revisit and take all whether to buy the stock or not.
Okay, Aditya, the next query is from Saurabh, and he wants your take on 5-star as well as UCO Bank. Can he enter at current market price?
So we'll first look at UCO Bank, Shrishti, and see. Though the stock did see a good bounce back, and from there we have seen the correction because most of the PSU banks have shown a correction. He can look to buy in a staggered manner if he's looking to actually go ahead and buy UCO Bank. Not the best of the PSU lot to buy, but even if he's looking to get into UCO Bank, he can look to buy in a staggered manner, buy some at current levels, maybe a 40, 50%. And on downside, closer to about 30 is where he can look to buy more. Because I see some more downside in the stock. There are high chances that the stock will have some more downside. As far as 5-star is concerned, there too, yes, there is a bit of a correction in the stock after a significant rally that we have seen. Though it's a recently listed counter, so I don't have much data. But again, here I would suggest buying in a staggered manner because off late stock has seen significant correction from the recent high. So maybe at current levels, he can look to buy 40% and further on 3 to 4% correction, he can look to add more.
All right. This next one that I have is coming in from Alan Alex, and he wants to know about JP Power. He has 2,000 shares of JP Power, which he's purchased at 8.65 rupees per share. Wants to know whether he should exit this particular counter. Aditya, what's your take?
Completely exit, Cheryl. I don't know why I don't want to buy these stocks. And there are more, if you want to buy something in this segment, maybe look for better stocks like a Tata Power. That definitely stands out within the power space. There's Kalpataru Power, not JP Power. Just because it's a 10 rupee, 8 rupee stock, don't get into that. If you get an opportunity to exit, please exit. You're still sitting at a minor loss because the stock can correct all the way to levels of 6.56.
Okay, Mr. Prabhakar, we did discuss about IGL, but another query that I have is on GAIL. Sunita Rai from Bangalore wants to know, can she buy GAIL at current market price?
I think so. No, Gale also has corrected, in this recent correction, so it has become attractive. The dividend yield is also good, but in PSUs you have to understand dividend yield plus some return. You need to be happy. You will not get something which is very consistent in PSU, and that too in the gas stock.
Okay, this one is coming in from Padmaseva Rao, wants to know about NMDC actually. Aditya, he is seeing 30% profit in this holding. Do you think that he should book out profits right now? Or what sort of a strategy should he adopt for NMDC?
So Cheryl, if I look at the long-term charts, there is a clear-cut breakout in this stock, and then I see further upside. So it will clearly depend on the time horizon that the gentleman has. If it's a longer-term time horizon, he's okay sitting at on the stock for another year or two, then I believe he should continue to hold. I don't see any reason to book out because I'm looking at a target of 220 on the upside, which is significant. But if he wants to book out 30% profit from current levels, he's sitting on 30%, he can look to book out at current levels and maybe look to re-enter closer to about 120, 125 because some downside is there in the stock. But over the long period of time, I definitely see up move in the stock.
Okay, Aditya, the next query is coming in on Rain Industries. Daulat from Chennai has bought Rain Industries at a price of 170 rupees and holding 200 quantity. Is this a good time to average out this particular counter, or he could rather make a shift to stocks like Aarti Industries and Stovecraft? He can continue holding it for the next 6 months.
So the time horizon is 6 months, Srishti. I think I don't see any up move in the stock Rain Industries in next 6 months. So clearly, I believe one should exit from the stock. Don't even look at averaging the stock. As an alternative, would you look to buy Aarti Industries? No, I would not look at buying Aarti Industries as well because there too there is a bit of a downside. The other stock that the gentleman is looking at buying is a Stovecraft. Maybe that is something he can look at buying. But still, I'm not too gung-ho on Stovecraft as well. If you're looking at buying at current levels, please do put a stop loss at 475 on the downside because that is the immediate support level. If 475 is taken, there'll be further downside in the stock. But of the three, I believe Stovecraft is the best.
I have a query from a viewer who's not mentioned her name or his name. Do mention your name each time you write to us. This one is on Triveni Turbine. Mr. Prabhakar, the viewer is already holding to your Triveni Turbine and suffering a loss of about 19%. Wants to know whether he should go ahead or he or she should go ahead and average this counter right now, and is it a good stock to hold on for the longer term?
Yes, the business model is very good. So there is no doubt about the business model. But averaging is something I would not do it now. No, because at certain point, valuation was very high. Is becoming attractive. Wait for 1 or 2 quarters. Now look for the results and update, and then you can average. There is no hurry to average in this market.
Okay, Mr. Prabhakar, the next query is from Tushar, and he's holding two names, Coal India as well as AB Capital, and he didn't share his buy price, but just want to know that should he continue to hold on Coal India as well as AB Capital? What's the fundamental take coming in on these?
AB Capital, we have a new management, and they have a rise fund also. So I think it is a very good hold. Coal India, normally the employee cost is too high in Coal India. So somebody who is looking at dividend yield, then Coal India is very good. But there are happening in Coal India. But for a long-term purpose, I will not hold Coal India. I think NMDC is a better pick. Previously also it was mentioned here. NMDC looks really good. I think their cash flow, the NMDC steel demerger is going to be very positive. So I think NMDC is a better pick than Coal India in this space.
Right, this next one is coming in from Sagar, and this one is for you, Aditya. He did mention, wanted to thank Kunal, but Kunal is on leave. So Aditya is there today, and Aditya, he wants to know for index, he wants to know for when do you see this pre-Diwali sale actually to come to an end, because he's saying that he's already holding massive shorts from 19,450 levels or so, and also he's holding shorts of Asian Paints from 3,400 levels in both F&O. So he wants to know, do you think it's good time to book out, or do you expect further decline and he should hold on to his short positions?
So congratulations first up on excellent shorting levels. As far as Nifty is concerned, Cheryl, I believe he could look to book out some profits at current levels. There could be a short covering rally closer to levels of 19,100, 19,200 from current levels. That is where he can look to re-enter his short positions. As I mentioned, immediate oversold levels we are looking at Nifty. So there can be a short covering rally as far as Nifty is concerned. So he should look to cover his shorts and look to re-enter at higher levels, because the next leg of downside will start then. Talking of Asian Paints, there too, I believe stock has already seen significant downside, approaching good support levels of around 29.70, 29.60. So around those levels, he can actually look to cover his short positions in Asian Paints as well.
Okay, Aditya, the next query is on Axis Bank, the only counter in Nifty 50 holding on to the gains on the back of earnings. And SK Saran wants to know, is this a best price to make an entry in Axis Bank for a long-term period?
No, Srishti, unfortunately, I don't think so. This is one of the stocks, because of good numbers, it has not corrected. But I believe it will follow suit, and it will fall in line with its peers, and maybe closer to about 920, 925 is where good support levels lie for the stock. He can look to enter Axis Bank around those levels. Don't be in a hurry to buy Axis Bank just yet.
All right, this one is for you, Mr. Prabhakar, coming in from Ghosh Dada from Delhi, and he wants to know about Jain Irrigation. He's saying that he's holding Jain Irrigation, 10,000 shares. He started buying this particular counter since the level of around 20 rupees per share. He wants to know what should he do? Should he buy more, because he's already booked his good profits in this particular counter? And he believes that the company management has become better. Do you concur with that view? And what's your take on Jain Irrigation?
We don't track the stock, so I won't be able to comment on this.
All right, Aditya, on the charts, do you think that it makes sense for him to go ahead and average out right now, or buy some more of the shares because he already booked profits?
He can do so actually. He can look to buy some more stocks clearly, because of the fact that he's already booked out profits. So his cost would be near zero, I believe. On the downside, 50 is a very good support level. So maybe he can look to put a stop loss at 50 and look to buy some at current levels. And if it corrects closer to about 53.5, he can look to buy more. But put a stop loss at 50. That should be a trailing stop loss for the entire position that you hold.
Mr. Prabhakar, the next query is from Poonam Anand. She's holding 200 shares of Sunflag Iron and Steel from a price of 199 rupees, and especially in the last 5 days, the stock has corrected from those levels and down about 20-odd%. What to do next, what to expect, and at this point, can she average out this name?
Whenever market corrects, metals are one segment which will correct more. So it has happened across the metal segment. So that is part of market. So I think once the correction is over, again the rally will come. Nothing to worry. But in metals we like JSW Steel, Jindal Steel, Tata Steel, rather than other players. So being in the top player is always very important.
All right. On that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking your query. This one is coming from Muni Rajulu from Andhra Pradesh, and he wants to know whether it's good time to buy Usha Martin as well as JSW Energy for a period of 5 years. What's your take on that, Mr. Prabhakar? Do you think both of these counters right now are good buy?
JSW Energy, yeah, wonderful result. I think that is a very good buy. Usha Martin, I don't track.
Mr. Prabhakar, the next query is from Anju from Dubai, and she's asking that in this downward trend in the market, is this advisable to enter into PSU banking names like Bank of Maharashtra, BOI, PNB, UBI? So any of the counters that you like at this point in time?
I think correction is a good opportunity to buy. I think Union Bank, where they are talked about digital transformation, that is one good pick here. No, even PNB, if it corrects, one can buy. Bank of Maharashtra, the growth in half year was 8,000 crore in their loan book. There is a slowdown in the growth. That is the only worry. But if the stock corrects, then it becomes even attractive.
All right, this one is coming from Anandan, and Anandan has Divi's Laboratories 80 shares at a price of 3,070 rupees per share, Aditya, and he's making good profits, approximately 12%. Now he wants to know whether he should stay put with this or partially book profit and look to buy some other stock.
I believe he should continue to stay with it, Cheryl, because a partial correction is already there in the stock. We had seen a significant correction previously. On the downside, immediate supports are at 3,500, 3,400 to about 3,340 levels. So at current levels, he definitely downside is limited. He should continue to hold on to the stock. On the upside, stock can again test levels of 3,600 to about 3,700.
Okay, the next query is from Krishna Reddy, and this one is for you, Mr. Prabhakar, and he wants to know 5 large cap South Indian scripts to invest his 5 lakh rupees in the falling market. I don't know why the preference is for the South Indian scripts, but any advice on the same? And just let's keep the this rationale aside. So just want to know that what will be your 5 large cap recommendations?
A large cap, already we have mentioned a few stocks. You have Hindustan Unilever, which is not correcting. Even Nestle can be looked at. And banks. We talked about IndusInd Bank. So there are. I think I've given 4. If I have to give one more, then I cannot give a large cap. There is a small cap, Canfin Home, where the management has said they will grow every quarter 3,000 crore in the loan book. That is 6,000 crore, which is 20% growth in the next 6 months, which is very huge. If you annualized it, it is 40% growth in a loan book. I think that is one thing you can look at.
All right, with that, let's kickstart with the rapid fire then. First one is coming from Sandeep Kumar from Tirupur, and Mr. Prabhakar, he's holding HAL from the levels of 1,965 with a 10% loss right now, but he wants to know if it's a good stock to buy on every dip for the next 3 to 4 years.
Yes, buy on dips. I'm very positive on HAL.
Okay, Aditya, the next query is from a viewer. He didn't mention his name. Anjana is what I can see, holding shares of Vedanta from a price of 265 rupees. Can he buy more at current market price or move out?
Move out, completely move out. Maybe put a stop loss at 204. If that is broken, I see further downside in the stock.
Okay, a couple of stocks coming your way, Aditya. SJVN, ITD Cementation, Ujjivan Small Finance, Gravitas. Sudha is making good profits in these counters, 60 to 70%. Wants to know whether she should book out profits right now or hold.
Too many stocks, Cheryl. So SJVN, definitely you can look to book out profits partially. Can we look at the other stocks, the name quickly?
It was Gravita and Ujjivan Small Finance Bank.
So as far as Gravita is concerned, there too, stock should have been making decent profits. I see overbought levels. Exit from Gravita completely. That's a good time to book profits. Ujjivan, maybe she can continue to hold because this is something which is looking very interesting on the charts, and I believe there is definitely more upside in the stock. So continue to hold Ujjivan.
Mr. Prabhakar, Eshdave holding 14 shares of TCS from a price of 3,150 rupees. Is that a hold or sell?
Hold.
Okay, this one is coming in from Arvind Reddy from Hyderabad. Wants to know whether he can buy Union Bank right now for the longer term. What's your take, Mr. Prabhakar?
It is a buy at current level.
Okay, the next query is on Suzlon. Mr. Prabhakar, Nanjeep has been holding 50,000 shares of Suzlon from a price of 22 rupees. Hold or move out?
No, I don't track the stock, so I will avoid comment.
Okay, Aditya, this one is for you from Ramamurthy from Bahrain. He wants to know about Bharat Forge. Is it good time to book partial profits with 50% margin?
Yes, he can look to book partial profits at current levels, but the downside is limited. So I would strongly recommend don't completely exit from the stock. 950, 970 are good support levels for the stock.
Okay, but with this, viewers, we are completely timed out in this edition of Rapid Fire session as well as for the Buy Now Sell Now show. Thank you so much, Aditya and Mr. Prabhakar, for joining us today and helping all our viewers with their stock-related queries. But for now, it's a goodbye. But seeing at the market share, a mild recovery from the day's lowest point, and it's the IT pack that is showing some cheer, but not much to take the markets up.
Absolutely, market's still languishing. It's up at that 18,900 mark when it comes to the Nifty. But with that, we're totally out of time. So thanks so much for watching. Stay tuned. Markets at noon coming up next.